Hello, and welcome back to Explain the Charts, your go-to channel for deciphering market movements. Today, September 22nd, 2025, we're putting Microsoft, ticker symbol Microsoft, under the microscope to understand its recent price action amidst a flurry of news. The headlines paint a compelling, albeit somewhat contradictory, picture for this tech giant. On one hand, there's significant investor enthusiasm stemming from Microsoft's extended partnership with OpenAI and its leadership in AI technology, particularly through initiatives like ChatGPT and Azure platforms. This wave of AI excitement and recent regulatory wins, such as resolving antitrust disputes with the European Commission regarding Microsoft Teams, has been cited as a primary driver for positive market sentiment. In fact, just a few days ago, one report highlighted shares surging over 2% and reclaiming its 100-hour moving average, eyeing a key resistance level at $518.29. The company also reported robust Microsoft Cloud revenue for fiscal year 2025, reaching $46.7 billion, a 27% year-over-year increase, showcasing strong fundamental growth. However, not all news has been rosy. Several analysts have noted that Microsoft stock has been in a rut since its last earnings report in July, underperforming relative to the broader S&P 500. The theories behind this unexplainable dynamic include concerns about Azure cloud computing growth, especially if OpenAI's reported $300 billion cloud deal with Oracle Corporation leads to a shift away from Azure. There's also talk of a sector rotation, with investors moving out of software and into semiconductors. Looking at our daily chart, we can clearly see this post-earnings rut and subsequent recovery attempts, a period of significant volatility and uncertainty for investors. Specifically, if we narrow in on late July and early August 2025, after the July 30th candle that showed a close of $513.24, the very next day, July 31st, saw a significant drop from an open of $555.225 to a close of $533.50 after touching an all-time high of $555.45. This massive red candle, accompanied by very high volume exceeding 51 million shares, confirms the immediate negative reaction to the earnings release, despite the strong underlying business performance reported earlier. The magnitude of this single-day decline underscored investor anxiety regarding future cloud revenue growth and overall market sentiment. The price then continued to decline and consolidate through August, finding temporary support around $519 to $520, which previously acted as resistance, then experienced another major dip to a 52-week low around $344.79 in early April 2025. This period of significant correction and recovery from its 52-week low shows how rapidly market sentiment can shift, reflecting both the rut and subsequent buying interest. Zooming out to the full daily chart, we observe a clear long-term uptrend despite these dramatic dips and periods of consolidation. The stock has consistently formed an ascending channel, characterized by higher lows and higher highs, indicating sustained investor confidence and robust growth potential over the broader timeline, driven by its core businesses and AI ventures. This overall upward trajectory suggests that long-term investors remain committed to Microsoft's growth story. Notable support levels have emerged around the $400 to $410 mark multiple times in late 2024 and early 2025, demonstrating strong buying interest at those valuations. More recently, the $495 to $500 area in September 2025 provided a floor, indicating that market participants are willing to step in around this level, reinforcing the bullish longer-term outlook. The 52-week high of $555.45, established on July 31, 2025, now acts as a significant long-term resistance level that bullish traders will aim to challenge, representing the previous peak of investor optimism. Conversely, the 52-week low of $344.79 in early April 2025, followed by a strong rebound with high volume, marks a critical long-term support zone, suggesting a decisive point where institutional capital re-entered the market. Now let's switch to the one-hour chart to examine the short to medium-term dynamics, specifically focusing on early September 2025, a period where the price initially moved sideways. Between September 2nd and September 10th, Microsoft largely traded within a contained range of roughly $492.37 to $508.85, indicating a battle between buyers and sellers without a clear victor. This period aligns well with external reports suggesting the stock was expected to move sideways with a high probability of price increase, implying cautious optimism despite the stagnation. The significant drop on September 5th from around $511.90 to $492.37 on noticeably higher volume highlighted strong selling pressure, potentially linked to the aforementioned Azure growth concerns or a broader market rotation out of software stocks. This decline tested critical short-term support, but a sustained break lower was averted, showing underlying resilience. If we look closer at the September 11th, 2025, one-hour candle at 2100 hours Universal Time Coordinated, a powerful bullish reversal occurred, marking a potential shift in momentum. The price rocketed from an open of $501.01 to a close of $513.84 on robust volume, far exceeding typical hourly trading activity, which suggests a significant influx of buying power. This surge, after a period of sideways movement, could very well be the significant upswing driven by heightened investor confidence following several key developments as reported just days ago, potentially fueled by fresh AI breakthroughs or regulatory clarity. This strong momentum decisively broke above the previous consolidation, hinting at renewed and aggressive bullish interest in Microsoft stock. Moving to the even more granular 15-minute chart, covering September 17th to 19th, we can see the immediate aftermath and continuation of this bullish push, leading right up to today's activity. On September 17th and 18th, the price largely hovered around the $507 to $512 range, consolidating the gains from the September 11th surge and establishing new immediate support levels. This period of short-term consolidation showed healthy price action before another potential leg up. Then, on September 19th, particularly between 1322 Universal Time Coordinated and 1952 Universal Time Coordinated, Microsoft saw another very significant upward move, climbing steadily from roughly $509.60 to close around $517.26, ultimately reaching $517.93 for the daily close. This aggressive buying perfectly aligns with reports of Microsoft testing the $518.29 resistance level, indicating very strong short-term bullish sentiment and a clear break from any rut narrative in the immediate time frame. Such a pronounced move on increased volume suggests strong conviction from buyers, pushing the stock towards its next significant test and signaling potential for further upward momentum. This recent upward trajectory is paramount for traders looking at short-term entries and exits, confirming the immediate trend is upward and signaling a potential challenge to higher resistance zones. Now, for a comprehensive recap of important price levels and our unbiased predictions for Microsoft's near-term and long-term outlook. The all-time high of $555.45, reached on July 31, 2025, remains a major long-term resistance target. A break above this would indicate unprecedented bullish strength. Immediate overhead resistance is currently at the $518.29 level, as specifically mentioned in analyst reports, with a recent high of $517.93 from September 19th acting as a very strong short-term hurdle that must be overcome for further gains. On the support side, the $508 to $509 area, bolstered by the 100-hour moving average, has become critical immediate support after the recent rally, serving as a first line of defense against pullbacks. Further down, the $502.76 to $506.33 range, encompassing the 20-day and 50-day moving averages as per recent reports, offers a more robust short-term support zone, and a breach here would signal significant weakness. Long-term support sits firmly around the $445.65 mark, corresponding to the 200-day moving average, representing a strong psychological and technical floor, with the 52-week low of $344.79 providing the ultimate long-term baseline. Looking ahead, there are a few distinct scenarios we can consider for Microsoft, keeping in mind today's slight dip from its recent highs to $513.345. Firstly, a continued bullish breakout above $518.29, especially on strong and sustained volume, has a moderate to high likelihood. Given the recent AI-fueled momentum and regulatory wins that are driving positive sentiment, this would be strongly reinforced if upcoming news highlights further significant enterprise adoption of Azure AI services, new strategic partnerships, or unexpectedly strong forward guidance, creating a compelling narrative for sustained growth. Such a move would signal that the market is willing to push past recent concerns and fully embrace Microsoft's long-term potential in AI and cloud. Should this breakout occur, the next logical target for bulls would be a retest of the $555.45 all-time high, potentially setting new records and affirming Microsoft's market dominance. However, there's also a moderate likelihood of consolidation around current levels, perhaps between $508 and $518, as the market digests the rapid gains and awaits fresh, impactful catalysts. This sideways movement would become more probable if global macroeconomic concerns reemerge, if there's a temporary lull in significant positive news flow specifically for Microsoft, or if broader market fatigue sets in, leading to profit-taking, as we saw with today's slight pullback. A bearish reversal, breaking decisively below $508 and subsequently the stronger $502.76 support, has a low to moderate likelihood in the short term, but is a scenario that astute traders should prepare for. This downturn would be plausible if negative news regarding cloud competition, such as the Oracle OpenAI deal, materializes with concrete impacts on Azure revenue, or if the broader tech sector experiences a significant and sustained downturn, triggering a flight to safety. If Microsoft falls below these immediate supports, the next key levels to watch are the long-term MA 200 at $445.65, which could act as a strong rebound point or a further breakdown indicator if sentiment truly sours. For traders, always pay exceptionally close attention to volume. A significant increase during breakouts or breakdowns will strongly reinforce the validity and sustainability of the price move, signaling institutional participation rather than mere speculative retail interest. Keep a vigilant eye on any major announcements from Microsoft or its direct competitors regarding AI and cloud computing initiatives, as these will undoubtedly act as significant market movers and re-rate the stock's future prospects. Additionally, continuously monitor the overall performance and sentiment of other Magnificent Seven stocks, as collective sentiment shifts within this influential group can have a substantial ripple effect on MSFT's performance and investor perception. Any unexpected changes in regulatory environments or geopolitical events could also introduce new variables into the equation, impacting investor confidence and leading to unforeseen price movements, so staying broadly informed is crucial. Remember to always conduct your own thorough research, develop a well-defined trading plan, and manage your risk meticulously, adapting to new information as it emerges rather than relying solely on past trends. Successfully navigating these dynamics requires both a keen eye on technicals and a deep understanding of the underlying fundamental drivers. That's all for today's in-depth dive into Microsoft. Don't forget to like, share, and subscribe to Explain the Charts for more essential market analysis. See you next time.